Hi everyone, you're all very welcome to Thursday's US session open. So today we'll obviously be looking at broader price action dynamics over the last obviously couple of days or so, particularly last night's close and into obviously the US open today. We will be looking at obviously as well the economic calendar, the data and the information that's come out of 1:30, and of course the onslaught of volatility in the back end of that as well. So today, markets still very, very choppy. Of course, last night for those traders in our community, you would have seen very, very heavy selling into last night's close in a number of assets, in all risk assets, primarily indices. S&P 500, for example, moved quite lower into last night's close, into that kind of 9 p.m. close. Bitcoin in the crypto markets also seen some fairly heavy declines as well, which was noted in our group. Also as well, you have to factor out from 9 o'clock into kind of 10 o'clock, we had some fairly stellar numbers in the meta figures as well. And of course, we did see a little bit of recovery in some of those risk-oriented assets. So today, that recovery has continued to play out into the 2:30 open in the next kind of 9 minutes or so. So we'll be looking at the price action shortly and just kind of gauging that. So obviously tonight, before we look at the calendar, tonight we do have Amazon's earnings as well. Amazon and Intel after the close tonight, with Snap as well. So I think from a top 5, top 10 stock perspective, we're going to be very much watching the Amazon figures tonight to see, do they match what happened on Tuesday with outperformance in Microsoft and Alphabet, i.e. Google, and of course last night with Meta as well. If we see Amazon with some fairly decent figures, it means then that of kind of the top 10 stocks in the US economy, 3-4 of them have actually played out pretty well. And of course, we do have a couple still to come. We do have the likes of Nvidia. We do have Apple stock earnings to come out as well. So there'll be a few more kind of left to kind of conclude the primary aspect of earnings for obviously Q2 April, obviously for the Q1 overall data that was compiled. So obviously, as I said tonight, Amazon's going to be very, very crucial and integral, and really watching that closely. It's obviously going to be very, very important. Now, when we look at broader dynamics today, broader kind of data and price action, of course, we had significant data at 1:30. So we had our continuous jobless claims, again, came in pretty much as expected. Now, of the remaining data, the core PCE, the GDP, and of course, the PCE consumer price expenditure data, all of which were not great. Okay, so if you look at core personal consumption expenditure, it is actually increased from 4.4 previous figure. 4.8 was the consensus. So we knew it was projected to be higher, but it's actually come in even higher than what the consensus was. So core personal consumption expenditure effectively means that more people are spending higher amounts of their discretionary income within their household on products that they were paying obviously in the previous year. Okay, so naturally then the consumption expenditure within the household is increasing because costs of goods and services for specific products are still obviously either remaining high or going back up again. Now, second to that, we also have to look at two elements. So one is GDP growth overall, and of course the previous quarter, we actually had the previous 3 quarters, in fact, we had very, very good and positive growth. And kind of got back from that kind of 1.5% all the way up to 2%, where the previous figure was at 2.6%. Now, of course, into today, we've had a revision in consensus back down to 2%. But of course, that 2%, it wasn't even close. So the latest GDP figures overall is at 1.1%, showing or alluding to the fact that growth now is starting to come under a little bit of pressure into obviously the next Fed meeting. So of course, the last Fed meeting, we had that 50 basis point increase. So Fed obviously being fully committed in that approach to get rates as high as possible, get it above that terminal rate. And we talked about it in previous Zooms, how current interest rates is now above inflation for the first time in many, 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 many months. So you also have to look at that dynamic. So of course, with the higher rates, that generally factors into lower growth dynamic overall, and you're starting to see really that onset of all of those continuous kind of 50 basis points, 75 basis points, 50 basis points rates really being fed back into the economy. And as a direct result, we're really seeing growth numbers continue to wane in the back of some of that really, really important external data, which obviously is driven by the Fed and their interest rate policy and where they perceive the market to be. Okay, so last really then is the consumer consumption expenditure price index, and of course that's even gone up as well from 3.7 to 4.2, and the GDP gross domestic product price index has also gone up. So overall, really, there's not really too much to chime about, too much to be happy about from a market perspective. And we saw initial selling at 130 in the indices. So as a direct result, the initial move, if we look at let's say a 15-minute ladder or volume profile or even chart visibly, you will see at 130 there was a decent bit of selling. Now, since then, in the last kind of half an hour or so, we actually have come back. We've pared back some of those initial spikes. Price action has come back into yesterday's value area. So yesterday in the indices, there was a very, very clear recognition that around about this 4075 into kind of 4090 was the key prominent level. We talked about it yesterday in our Zoom, and really kind of confirming, would we actually break through that level yesterday we kind of talked about. And of course we did. Into last night's close, we had a little bit of selling into kind of 6 o'clock into 9 o'clock. We had some very, very clear selling. We did, however, pare back some of those selling off the back of the metadata, which came out after the close last night. And since then, we've kind of ground back up to yesterday's important value area. Now, that's exactly where the data has sold off from initially at 130. So really into 230 today, you're really focusing on initially where did the data sell off from at 130, but also looking at that broader range of where the price action has been throughout the course of the week. Okay. And as we said, we've talked about this kind of 4075 level really being very, very important until it was obviously broken yesterday. So really, as I said, all eyes is going to be between this kind of where we're currently at around about 4080 into that 4090 to see, does the price action maintain above that level below 4100 and poised to the downside, or are we actually going to get a break? If we get a break back above 4100, despite those data points that come out of 130, indices will actually hold up relatively strong. And that's really the big focal point from 230 into 3 o'clock, evaluating that price action on the open just to get kind of a clearer conclusion as to sentiment, even in the face of, as I said, fairly mixed or kind of fairly negative data, and just kind of being able to put kind of perspective on that, broadly speaking. And that's the most important thing here, being patient, allow those initial reactions at 230 to kind of breathe, those initial fulfillment of positions in the various assets. And then once you've got clarity into 3 p.m., you'll start to see kind of a clearer directional bias through the course of the afternoon in the face of what was obviously very, very heavy selling last night, a strong recovery off the meta job numbers through the Asia session, very sharp volatility initially at 130, and then obviously just letting that settle from the US Open, as I said, into 3 o'clock. So that's really kind of the focal point today as we look at a lot of these assets. So whether you're trading S&P, Wall Street, NASDAQ, whatever, right? It's just important to have clarity. We saw very, very similar moves, albeit the NASDAQ, very, very similar moves on Dow Jones, structurally speaking. So if you look at Dow Jones, Wall Street, very, very clear selling last night. We got up, but we're starting to see a little bit of selling into the open initially in the last kind of 15-20 minutes or so. So just kind of reaffirming that viewpoint from 230, let's say it's 245 into that 3 o'clock where we get that market profile first print of the open. And then you can get kind of assertions of where the markets is going to be for the rest of the trading session. And that's the most important thing here. Same again with NASDAQ. So even though the S&P and the Dow Jones has actually been quite mixed in terms of the data, and you'll see that over the last, as I said, hour or so, the NASDAQ has actually done quite well, right? We talked about it yesterday, how the NASDAQ had come down into this kind of 700, 750 level, and we've kind of popped back in against some of that bearish order flow that was created through the early parts of this week, i.e. Monday, Tuesday, and that heavy selling that took place Tuesday evening. Since then, the actual NASDAQ has recovered pretty well. So not alone our traders should be looking at obviously performance between 230 and 3, also keeping an eye on DXY as a correlation for that could be a clue. So what have we actually seen today? In the last hour or so, in particular, you'll have seen the DXY, the dollar strength has actually picked up a little bit. So if the dollar strength starts to pick up a little bit, that could weigh on risk assets. And that's why the caption of today's Zoom was obviously GDP down, risk elevated. So obviously that heightened risk could potentially factor into a shift towards safer havens, safer assets. And i.e., for example, that's the reason why the dollar has seen some significant rallies. Now, we've talked about the last few weeks how indice movements have been quite labored. They've been quite choppy. There has been cleaner moves in the bond markets. There has been cleaner move in the FX markets. And you're definitely seeing some cleaner moves today off of that data at 130. Okay, you're seeing stronger movements in DXY to the upside. And as a result, Euro USD has seen some fairly heavy selling, right? Cable has seen some fairly heavy selling. And of course, dollar yen has seen a significant bid to the upside. So we're seeing in the FX markets, the dollar has been taken home as a hedge against today's negative data of 130, and generally just as a clear hedge. And that's really the most important thing here, being able to understand the logic. If there's moves happening, why are they happening, and being able to understand that, being able to put clarity on it as well. Okay. Now with the DXY stronger moves, we've also seen some fairly big movements in gold, right? So gold initially sold off. There was a little bit of a wick to the upside, and then we got hammered lower. Okay. And that's obviously very, very clear. Now, this gold chart is just updating, so you can kind of see it there initially. If we go to, let's say, a 15-minute chart, there was a little bit of a spike at 130, but very, very clear selling. And as we talked about it on Tuesday, potential for price action to revisit this area down here around 1975, 1980. And of course, today's data print, we've seen a very, very clear $20 mark, a little over $20 from wick to wick. You're sitting at around about $25 move in gold, which again shows within a 60-minute period, very, very clear order flow there to the downside. And if you're looking at the shorter time frames, clear selling, a little bit whippy now. So you're probably going to see a little bit of chop from 2:30, let's say, into 3 p.m., where we start to see the markets try and get some sort of bias from the open. Now, as I said, going back to the indices, S&P's is coming under a little bit of pressure on the open. Dow Jones is already selling off, which again is clear. Now, I am short S&P's on two positions. I am short Dow Jones on one. Cumulative risk is around about 1.5%, collectively about 1.25% risk. So sentiment there is quite negative. So I'd be looking to see, does that kind of continue through the open through 3 o'clock and really kind of set the tone for a potential sell-off in some of these risk assets. And of course, if we see that dollar bias continue to the upside, it allows for a little bit of a correction in those indices. So of course, let's obviously wait and see how that one plays out in the first half an hour. If we bring in market profiles, let me just see if this is uploading. There was a little bit of a glitch earlier on. Market profiles is back working, so that's great. So in the S&Ps today, fairly clear bell-shaped curve between kind of 4090, 4070. We've seen some clear reactions. Obviously, the D prints is all the most important because, of course, that is where we are at come session open. Of course, yesterday, if you're looking at value area yesterday, in and around 4090, we sold off today. We rallied all the way back up into yesterday's market profile. And of course, market profile today is pretty much in a similar scenario to where we were yesterday. So of course, if we start to break through point of control 4080, break through that 4070 level of value lows, you're probably going to see that continuated sell-off continue through the course of the afternoon. And that's really kind of putting a little bit of clarity on the situation within the price action. NASDAQ, Dow Jones, NASDAQ I'm going to leave in terms of market profile because it's contrarian. It's rallied quite unusually given the risk elevated approach to the markets. But if you're looking at USA 30 on market profile, I think that becomes the secondary tool within the trader's arsenal, and you can kind of see that as well. So you've got that value area yesterday, clear sell-off into the close, a little bit of a rally back up. Now you'll actually see today the spikes on today's volatility did come up through that 33,500 level. So you are kind of approaching where there was a lot of volatility yesterday. Yesterday's volatility was around 33.6 into 33.5. And of course, today's spikes has come back, not exactly perfectly into the region up here, but it has come fairly close. It's come within 60 points, which isn't really that much on an index as volatile as the Dow Jones. And of course, today, D prints are coming through market profiles, point of control, 33,400, 415s, and we are trading below that into obviously 230, which the market is currently reflecting. So kind of keep an eye on that. 350, 400s, I think that's kind of a worthy area. If we start to take out this order flow here, then we could be looking for that downside continuation and really that risk elevation to the downside, flight to safety approach potentially kicking into the markets as well. I'm just being kind of conscious of that as well. All right, so that's kind of pretty much where we are in terms of broader dynamics. So if it's FX, commodity related to like gold or US based indices. Now, if you look at European based indices from this morning, FTSE quite choppy the last few hours. DAX continues to remain range bound between this 15,700, 15,900 area where we've been pretty much for the last week and a half or so. And Euro stocks had seen a little bit of a decent recovery this morning. But we are seeing a little bit of selling coming through in here around 4,370. So it'll be interesting because, of course, that could lead to a little bit of a runoff, particularly into the European close at 430 should that downside volatility really continue to be hammered home into 3 p.m. as well. All right. So, folks, that's pretty much where we are for today. All eyes, as I said, on volatility into 3 p.m. Just really seeing, is there any sort of clarity in terms of that selling? Do we actually see that market dynamic play out? If not, obviously gauging that accordingly as well. But having clarity into 3 p.m. is really is really the first point of view, and then obviously setting the tone for the afternoon as well. All right. So tonight, one quick recap. Obviously, Amazon and Intel tonight, Exxon Mobil and Chevron tomorrow. So if you're trading FTSE related stocks or anything energy related, obviously Exxon Mobil and Chevron should also be important to watch tomorrow before the market open, because of course Chevron and Exxon Mobil were two of the top 10 best performing stocks of 2022. And of course, with that movement in energy prices over the last kind of 3 to 6 months or so, I think that could be a very, very interesting narrative to watch over the next few weeks to see whether we start to see some of those energy stocks which outperformed in 2022 start to lag. And if they start to lag, that could be a little bit more downside in the likes of energy prices as well. So worth